All right, I had a bit of trouble finding the record button for a moment there, but welcome to this episode of Real Estate Chat with
John Perez.
and Robert Eid. Robert,
Yeah, man.
did we miss the bottom of real estate buying? So as we were chatting just a few minutes before I found and pressed the record button, you were telling me that so far, based on just the preliminary numbers that you're crunching for April to date, we're on track to reach about 8,000 sales, which in April of 2022, 8,008 sales happened on the Toronto Regional Real Estate Board, which is hovering around the 5-year or so average. Tomorrow, because we're shooting this on April 11th, tomorrow is the Bank of Canada policy, and we presume that the interest rates won't be touched unless there's some surprises with that. But what's happening, Robert? Did we miss the bottom? Did our real estate chat viewers miss the bottom? Did real estate haters miss the bottom? Are we going to see now a spike in both sales and prices? And if interest rates stay what they are tomorrow, is consumer confidence going to return in full force? And are we going to finish off this first part of 2023 in a strong manner?
Well, in the 1950s, there was a show called the $64,000 question. So adjusting for inflation, this is now the $64 million question. And I think you have a 50% chance of this being a spring spike where everybody got spring fever. There was nothing for sale. Prices were not coming down. And so buyers who had been sitting on the sidelines heard reports of 15 offers on new listings. And they said, oh, maybe something's happening. Maybe something's happening. And sure enough, it was true that anything that had been sitting around since last fall was sitting around and nobody wanted it. But anything that was new was being introduced at below the expectation of the seller on purpose with a hold date. And everyone from the sidelines was zooming in on that property and they're saying, this is not bad. So they're making 15 offers on it. Now, 10 or 12 of those offers were absolutely no good. They didn't want those. But those top three, they were good and they became deals. And this is what we're hearing about. The listing strategy is working beautifully because this is the spring. This is now for sure April, never mind March, never mind February, never mind January. Those are the low points. Now, pretty soon you're going to see crocuses. Pretty soon you're going to see daffodils. So if there ever is going to be a time, now the same thing happened, believe it or not, in 1991. Same thing happened in 1994. And I had to ask our good friend Ron Hott to dig out his old sales numbers. And sure enough, there was the spike. That for a few months, we had a hot market. Why? Can't say. Are we having a hot market now? It's a 50% chance that it will go away and a 50% chance that it's the return to balance of prices staying where they were over $1 million. Maybe they go to 1.2, but we don't know that. But at least they're not falling. So a return to an upswing, or it's going to return to a dither. And all we can do is compare the number of listings to the number of sales. We have been making observations for the last several months that the sales were operating at a number which was about 30% less, sometimes 40% in December, January, which is normally the lousiest time, 30% less than normal. And when it went to be 20% less than normal, that was an improvement. That was March. Now, half of March was hot, and the first half of March with the spring break and everything was what we were seeing before. So now we're April, and this is the continuation of what we saw in the second half of March. It's hot. If you, there's two kinds of real estate sales. One who had 10 listings 6 weeks ago, and now they got 2 because the other 8 sold. And the people who have 8 customers that want to buy a place, that were looking around, doing nothing 6 weeks ago. And now they still got those same customers because everything that they were looking at sold out. And they say, gee, I should have bought that one. Gee, I should have bought that one. And the new ones that are coming out are either not as good a property at asking more, or they're asking more and they want to have a hold date. So it looks like those are going to sell for more than what it used to be. So 50-50, and it's anybody's guess which one's right.
Absolutely. So if you're a real estate hater, then of course you're going to root for the 50% not going to happen. And if you are realistic at what's happening in this market, there's a 50% chance that if you've been sitting, you've been observing, if you've been waiting, if you've been hesitating, you may have missed your chance. I mean, we've talked in past episodes of Real Estate Chat. Look at the past couple of episodes. Make sure you click like and subscribe. And we've talked about things such as the recession. We've talked about things such as interest rate hikes affecting consumer confidence. We talked also about recovery. We've talked about low inventory. And Robert and his fantastic collection of data, charts, graphs have been showing and illustrating. That's a real cool thing about this is we pretty much had that journey since we've started this channel and up till now of this slowly yet sure upward rise, and we've seen a return to quote unquote normal market activity. If you're looking at Robert's seasonal charts, whether it's the school year or the annualized year over year. And so I guess the real question becomes too is that, you know, if you've missed a chance, and we've asked this question in multiple different ways, right? So if you missed a chance, Robert, and you were kind of like you as our viewer were skeptical of entering the market because you're not certain where things would go. And now you're starting to see the signals and the signs that, hey, everybody else has gotten off the fence. Some have long gotten off the fence. They've gotten into the market. And when that sort of perpetuates and that sort of creates that momentum of everybody else jumping on board now. So is it too late, or do you do this now, or is there, you know, wait till the summer when the next, you know, when you look at the year over year activity, the next dip would be the summer before it picks up again in the fall?
Well, you got it right there, because you're damned if you do and you're damned if you don't. And so the individual has just got to decide, do they see something that they like, or is it a sucker's rally? This is a stock market term where one factor or another causes everybody to buy. And, you know, day trading now, it's crazy. You know, they're in a different business. Our cycle is at least 1 month, probably 2 months for something to evolve and develop. There's the stock business is like 15 seconds. Day traders in and out in the course of the day 5 times. So your question is impossible because, as I said before, I am 50% myself in both camps. And so that is very wishy-washy. You know, 1991, 1994 is a long time ago. The conditions are very much different. I rest my final point on the only reason that prices will recover from 1.1 where they are now is if interest rates get cut. And I don't see interest rates getting cut until we have terrible bad economic news. And if we have terrible bad economic news, people are going to feel less confident and more inclined to not buy. So the next thing to look for is, does the flock, does the pile, does the glut, does the dribble of new listings start in April? People encouraged by the sales that happened, encouraged by the prices that were obtained, encouraged by the fact that somebody sold, maybe it's only 95% of what they got in the boom, but they sold in 1 week. No muss, no fuss. And they bought something first, so they tied up where they were going to go. You know, there's a million angles at play because all of these different market segments of what you want to do. Nobody wants to make a mistake. And there's a 50% chance of being wrong right now.
Well, the only thing that fixes mistakes is time, as they say. You know, that's a bit of a cliche thing to say too, but you're not wrong 20 years from now if you buy today. Just like anybody who bought in the 90s, and we gave that example. My parents bought in the 90s and they were not wrong after many years, despite the fact that prices went down after they had bought. And so there's, as Robert pointed out, there's a lot of different dynamics here at play. The R words, recession, comes up. Then, of course, there would be, if that were to happen, then there would be I guess, a reason for the government to intervene at that point and say, hey, you know what, let's ease off on these rates a bit. And that in itself should cause prices to rise because of the affordability part of it. But as Robert pointed out, it also affects consumer confidence. So many things are at play here, right? Inventory, right? Inventory rises, but let's say the sales or the absorption continues to grow at the rate that it does, then it's just going to basically result in a stabilized price growth. Let's say you're not going to see 20% jumps, right, Robert? You'll probably see more of a, what was the guesstimate by the Toronto Regional Real Estate Board, like a 10 or 12% year over year for this year? Is that sort of what it was?
Well, I went to a thing this morning where they maintain that their prediction is slightly under, but still on track. So maybe they're right, maybe they're wrong. It's very hard to guess beyond 60 days in advance.
Yeah.
The thing that nobody's talking about is inflation. I think I said something about this the other day, that yes, inflation is not going to go back to zero. It's not going to go to 2%. It's going to stay at 4 to 6%. They'll just start measuring it differently, and that will affect real estate because inflation really is a measure of the decreased purchasing power of your money. So prices will go back up because of inflation. And we saw inflation forever, except for the last few years when, mid 2015 through to the lockdown period. So it's very complicated. Everything affects real estate. Everything affects residential real estate. Everything affects what we need to base our decisions on.
There you go. Well, there you have it. If you are in the 50% camp that thinks that the market is going to do well from this point on, click on like. If you're a real estate hater, or if you're in the 50% cap that thinks that the market isn't going to do too well in spite of what's happening right now, click dislike. Either way, make sure you click on subscribe so that you can see future episodes of Real Estate Chat. And put into the comments what you think about the real estate market, where you think it's headed, whether you bought or sold or invested, whether you're going to stay renting because you're quite not sure yet where things will go. And make sure you watch all of our past episodes of Real Estate Chat. Thank you for watching this episode. Bye for now.
See you later.